Why is XRP wallet security suddenly a serious concern? As digital assets like XRP continue to grow in value, adoption, and global visibility, they naturally attract more attention, not only from investors, but also from highly organized cyber criminals. Many people assume that crypto losses happen because of flaws in the blockchain itself. However, the harsh truth is this: most of crypto losses happen due to poor personal security, not network failures. A recent incident within the XRP ecosystem has once again reminded holders that self custody is both empowering and dangerous when basic safeguards are ignored. This story is not about a broken blockchain. It is about how one mistake can lead to instant and irreversible loss. So, let's break down what happened, why XRP holders are being targeted, and what this means for the market moving forward. So, what happened in the XRP wallet compromise incident? A crypto security commentator known as Saif recently revealed a disturbing case involving a single XRP holder who lost nearly 70,000 XRP in one unauthorized transaction. The transfer was later confirmed directly on the XRP Ledger, leaving no doubt that the funds were gone for good. What shocked the community was not the amount alone, but the speed and finality of the loss. There were no warning pop ups, no delays, and no way to reverse the transaction. Once the funds moved, they were permanently out of the owner's control. This incident served as a chilling reminder that crypto does not forgive mistakes. From a market perspective, events like these often trigger short term fear, especially among newer investors. However, they also reinforce an important lesson: that's security awareness directly impacts long term confidence in self custody adoption. So, did the XRP ledger itself fail, or was the wallet compromised? On-chain data confirmed that the transaction processed normally on the XRP ledger. The network fee was almost zero, and there were no signs of abnormal behavior. In other words, the blockchain did exactly what it was designed to do. This distinction is critical. The XRP ledger remained fully secure. The failure happened at the wallet level, not the protocol level. Attackers gained access to the user's private keys or recovery phrase, allowing them to sign a valid transaction. Blockchains do not judge intent, they simply verify signatures. If a transaction is signed correctly, it gets executed. It will get executed whether the sender intended it or not. This reinforces market confidence in XRP's underlying technology while simultaneously highlighting the human risk factor that continues to challenge mass adoption. So, why are XRP holders becoming prime targets for attackers? As XRP gains relevance in global payments, regulatory discussions, and institutional narratives, attackers shift focus toward individual holders rather than large infrastructure. Personal wallets are easier targets, especially when users rely on hot wallets, browser extensions, or mobile apps without strong security habits. Social engineering remains the most effective attack method. Fake support accounts, cloned Ripple websites, fraudulent airdrops, and malicious wallet connection requests are everywhere. Attackers rely on urgency, fear, and excitement to manipulate users into revealing sensitive information. Once a malicious link is clicked or untrusted application is approved, attackers can drain funds within seconds. Because blockchain transactions are irreversible, victims almost never recover their assets. This reality adds psychological pressure to the market, reminding holders that personal responsibility is inseparable from decentralization. So, which security practices should XRP holders never ignore? According to SIFE, incidents like these are entirely preventable when users follow fundamental security rules. Fundamental security rules. Hardware wallets remain the gold standard for protecting large balances because they keep private keys offline and isolated from internet-based threats. Users must never share seed phrases or private keys, regardless of who is asking. Legitimate companies, developers, and support teams will never request this information. Verifying website URLs, avoiding random decentralized applications, and ignoring unsolicited messages dramatically reduce exposure to scams. Keeping devices updated and maintaining healthy skepticism is essential. In crypto, urgency is often a red flag, not opportunity. From a market standpoint, widespread adoption of these practices strengthens trust in self-custody and reduces panic-driven sell-off after security incidents. So, what does this incident mean for the future of self-custody and XRP adoption? This incident does not expose a weakness in XRP itself. Instead, it highlights the responsibility that comes with decentralization. Removing intermediaries gives users full control, but also full accountability. As XRP adoption grows, security education will be just as important as price action or partnerships. Markets mature when users mature. Events like these push the ecosystem toward better tools, better habits, and a stronger awareness, ultimately supporting long-term growth rather than undermining it. In my own personal opinion, this incident is not a sign of weakness. It is necessary wake-up call. XRP remains technically sound, efficient, and secure at the protocol level. The real vulnerability lies in human behavior, not the blockchain. If holders take security seriously, incidents like these can strengthen the ecosystem, not damage it. Awareness leads to better practices, and better practices lead to greater confidence in self-custody, which is essential for true decentralization. In the long run, those who treat security as part of their investment strategy, not an afterthought, will be the ones who truly benefit from XRP's growth. And this finally ends our video. Thank you very much for watching and see you on the next one.